Hi, Jess.
What's going on? What's going on? Happy Sunday. Okay, so what I just realized hopping on this call, did I drop y'all's I did not drop y'all Sunday night call. I mean, not Sunday night call. I didn't drop y'all Saturday call, right? I mean, y'all see it. It's been a long day. I didn't drop y'all's Monday night call, right? In the Facebook group.
Nope.
Okay, so I'll make sure I do that tonight. So that y'all have that. Let me just put this in the group really quickly.
Hey Jess, how you doing this evening?
I'm good. How you doing?
Doing well, thank you. I'm mad I missed that Monday call. I heard it was fire. I can't wait to watch it.
I can't wait for you to watch it. I'm gonna recap a little bit just because I know the YouTube people didn't. I went a little bit over the trade that I had taken or that I had posted on Instagram. Telegram quit unexpectedly. Can y'all check the Telegram group and make sure that link is out for me real quick? Because my thing is giving me an error. I just want to make sure it's in the group. Y'all see it?
Got it, Jess. It just went out.
Okay, perfect. Okay. Now that that's that. Okay, so for you guys, listen, beautiful people, how you doing? How you guys doing? You good? All right, so I'm going to share my screen. I'm probably going to be talking fast just because you remember last week when we went over and I told you guys that I wanted Elle to come back on because it was a few questions that I know people had that they didn't finish answering or getting their questions answered. So I'm gonna go a little bit into, we're kind of gonna have about the same thing that we had last week where I go over charts. And then I do want you guys to get your questions answered when it comes to fundamentals and fundamental analysis, because as you guys know, the technicals is literally price action and price movement. And I always believe that the technicals are giving you insight into something fundamentally happening, because anytime we get to a level of resistance or a level of support or whatever the case may be, the market typically shifts unless we break structure, but understanding why those things are happening is important as well. So he's going to come back on as we are going through, but let me share my screen. Trading view. So y'all made some money this week. I know some people told me they had caught that initial sale on GU, the first sale before we had the pull back. Did y'all make some money? Y'all know I don't reread it in the chat as much because I'll be looking at the chart. So definitely let me know, give me some feedback. It's a yes or a no or what's up. We made some money?
Yes.
Okay. Thank you. Thank you, my dear Rebecca. Okay, so let's talk about GU first, and then I want to talk about, we talked about it a little bit on the call. I'm gonna recap it quickly just for the people who are on YouTube. The people that are on YouTube. Let me first. Ooh. Okay, Michael just updated this computer and I'm trying to figure out. Can y'all see this in widescreen?
Yeah.
Okay.
Yeah.
Y'all all see my screen. I don't know why
you see it.
it's showing up like
Yes.
that.
Whatever you just did, it was filling the screen. Now it's not fully filling the screen right now.
Yeah,
Is it filling the screen now?
it's better.
Almost. Now it
it's
is.
really good. Now it's perfect.
Okay. I don't know what that was. It's so weird. Okay. But anyways, let's go here first. Then we're going to go into where we are now. Okay. Y'all know kind of like the flow of the call. So last week, all right, structure. Remember before we had gotten off the call, I talked a little bit about, I was seeing a little bit of divergence through this structure right here. And we talked about how when price had its initial impulse down, typically we know price pulls in impulse correction, continuation. Before this structure, we had this impulse and then this triangular pattern forming, right? So as we had ended the call, I was talking about, I had saw a little bit of divergence, minor structure, whatever the case may be. We ended up having a break and retest of this literally that night. And then price came here, okay, pulled back, retested this previous level of resistance and then fell. That pullback was to go to this structure of of course, our fibs, our TP1 first, right? And then TP2 if you caught it. But look at this. So this was my entry. I literally only caught it off of resistance, but on Monday night call, somebody else said that they had caught it. They had drawn a trend line through this structure here and taken the break and retest that way. You guys know, and I always tell you guys, I can have a trend line in a different area than you guys have it, and so forth and so on. I can have a zone in the area. Like once it gets to the chart, right? If you take the CH off of chart, it's artwork. Like once it gets to this point is really like, I don't want to say your creative style, but it doesn't have to be as concrete as, okay, your point A's and point B's have to line up, or you have a fib and you have to draw it from a high to a low and a low to a high. Like those are set rules that always need to be in place and always need to be implemented. When it comes to trend lines and things of that and structure, like that we're drawing on our charts, that like, again, I cannot be in the market at the same time as you and you have a trend line in a different area than I have it. That's perfectly fine, especially when we're talking about minor structure, okay? So somebody had taken it off of that trend line, which again was perfectly fine. I took it off of this resistance level. Price ended up pushing down to our -27 structure here. And then I know a few people on that call, this had happened literally Monday where we had the break and retest of here. So if you didn't catch it up here, you definitely could have caught the sale here to carry it to here. So also last Sunday, we talked about price potentially coming down to our, what is this level called?
Weekly level.
Yeah, to our weekly foundation level. So looking out for that. So price ended up pushing to our weekly foundation. As we know, our foundation level is literally just like a what?
Magnet.
Yep. So structure came down to this foundation level. Divergence started to form. All right. What does our divergence mean?
Price reversal.
Okay. So at the point in which we had this divergent structure here forming, draw it out. So again, price doing the opposite of the RSI, our divergence. All right. So we had this price going down, divergence, RSI pushing up in this structure here. We ended up having an impulse. Now, of course, we did not have a break and retest of this. Now, I mean, some of you guys know how in you guys' courts, you have the trend line of minor structure before you draw the major structure trend line. Some of you guys could have taken it in there if you had drawn like a sharp trend line coming down here. I didn't have that drawn. But the safest entry would have been the test, break, and retest of your support and resistance here. So we literally I drew a zone on top of here also, but we literally pushed past this foundation level, literally broke. All right, so we had our test of resistance broken, retested at support. And then as price continued, we literally retested this foundation level a couple of times. Now I drew a zone here because of course, when I look at a foundation level, I don't look at it as just one point. So this is a point that's being rejected. I look at it as a range, right? So I put a zone on top of here just because this was like really precise. Every time price came here, we had rejection off and we had like a lot of wick exhaustion, especially on the higher time frame when we came to these levels. So here, I didn't take this first buy here. I literally taken it here, and it wasn't that I just didn't see it at this point in time right here. After I had taken this initial sell, like I had stopped trading for a little bit, just because I wasn't in the market at the time. Then I had taken this. When was this? Later on in the week. So this was like 9 a.m. Thursday. So here up into, so we have our point A to point B. Literally price, consolidate. Our 50%, we know that is our neutral point in our Fibonacci levels, price reversal zones. So we came here, retested this. Literally, I was looking for price to come here to our, of course, our TP1. Price hit TP1, push back down. TP2 literally happened on Friday. I was not in the market no more at this point in time, but if you guys were actively trading then, and that was a trade that you took advantage of, great for you. All right, so where are we now? So literally here, I mean, of course, when we get to our negative 61.8, we're looking for a reversal, but looking at this structure, mind you, this is a very minor. All of these fibs that we have drawn along here are minor fibs that are in here. Okay, so I want to see this gap close. Looking at the DXY and looking at a couple of things, price could literally push down before the continuation up. With the DXY, price can push up before the continuation down. So of course, we know the DXY is literally our dollar index. All right. So anytime we're looking at GU or our currency pairs, we're looking at it as the opposite. Not always, because it also depends on what currency we're trading it against is doing. But typically, when we have it in this level or in these structures, is doing the opposite of what our currency pairs are doing, because it is the quote of what it is that we're trading. Make sense? I know I'm going fast, but again, I want to make sure L has its time. So are y'all with me?
Yes.
Okay.
Yep.
Let me ask y'all.
Yeah.
Yep.
Okay. Do I be sounding like a robot? Not a robot.
No, not at all.
No.
Sometimes I'll be like,
No.
I hope they catch me. Not a robot, but sometimes I really feel like some people like, girl, what the hell are you talking about? Maybe because y'all in the course is different, but I feel like some people on YouTube be like, huh?
No, you just sound like you know your shit.
Okay. All right. So everybody with me, right?
Yeah.
Yes.
Yes.
Yes, ma'am.
So let me share screen.
Yes, ma'am.
Share. Okay, so let's go to gold. I pretty much have gold doing the same thing. Now with gold though, same thing as GU. Actually, I didn't pull out on GU. Let's look at higher time frame structure so we can see what's going on. No, it's a lot going on my fibs, but yeah. Look to see, just because I want to see this gap close, I mean, this would be my first trade, right? I didn't get any. Because I'm literally just now on this call seeing that I was out today all day. We went to church and I had legend. It's been a lot. So I'm literally looking at this on the call. So I did not hop in this to close this, but I'm looking for this to go to here and then look to see if we have a pullback before our continuation of our structure. Okay. Now, make sure you guys, of course, use your confirmations for entry as you're approaching the market. Gold is doing what it does. Okay. So let's look left first. Let's look at 4-hour structure first. All right, so, okay, so we have some highs. This is a little critical area here. Gold is at a foundation level also, but like, look at where it is. Look at even where it pushed down to. Like if we look left here on 4-hour structure, do y'all see this level of support that it came to where it rejected this week? You guys see that?
Yes.
Even with the high. I'm sorry, y'all. This is the first time I'm looking at the market today. Or hold on. Close this off. Yeah, with both of these. So this is I want everybody to see what I'm looking at. I'm going to use the annotation real quick. Elle, are you on a call yet? All right. Resistance tested as support all through here. Same
Yes.
thing here. We have support or resistance all through this structure here. So this is 4-hour, by the way. So we want to see if this 4-hour, before we just have this continuing up, right? Before we just have this continuing up, I did not mean to draw at that level. Actually, let me just use undo. Before we just have it continuing up, you see how price came here before we just have it breaking through this, let's make sure we don't have a pullback to this foundation level. I could see this pulling back, kind of same as GU actually. I could see this pulling back before we have the continuation higher. This is divergence also, but that first impulse is already happened. Yeah, that first impulse. This looks like it's already at a negative 61.8 on here. Yeah, it is. Now this is a minor fig that I have on here, and we're at a weekly level. So look to see if this pulls back before just shooting straight up. Yeah, we would need to see resistance broken. Also, I don't have a trend line coming from the top of the structure. Remember that last sale that we were on? Yeah, this is also at a trend line. So look to see, we need structure. We need our breaks and retests first. So you guys know how to trade those. And this is also starting a wick. Hold on, I'm gonna adjust this fib just to see something real quick. So this was the first 38.2 got hit right here. Price hit TP1, then shot down to our foundation level. This is probably a negative 20. If I adjust it to the new low, it's probably a negative 27 level. I don't adjust higher time frame fib levels. This isn't a 4-hour fib, it's a 1 hour. But let me just see something. Is this a negative 27? Yes, it is.
Yeah, it is.
Wow. Okay. I'm gonna keep it here. Where I had it though. Just because we did hit a valid PRZ level, it hit 38.2. You guys know 38.2s are impulse aggressive. So we hit 38.2, shot down, hit 38.2, shot down. Zone, negative 61.8 on its main. So yeah, we already have wick exhaustion. I want to see how this plays out. I'm sitting on my hands right now until I have confirmations for some stuff. Remember, confirmation is everything, okay? But we definitely need to see some momentum just because we've had like falls like crazy. So look to see if the DXY, once the DXY, this closes and continues down. If this closes, then continues down, so pulls up to go down, then that makes sense. And gold pulling back to go up. Yeah, that makes sense. Yeah, just wait till you have your confirmations first, though. But okay, L.
Yes, can you hear me?
I also want Elle to talk tonight just because we had our questions from last week, but there's also some things that have happened this week that are, affecting currencies right now and going to be affecting currencies this week. So Elle, would you like to? I'll mute them. All right.
Oh, no problem. Just want to make sure everyone can hear me because I'm using my AirPods.
Yes, everybody can hear you. I just made you co-host
Yeah.
also. Yes, the Israeli war, the war in Israel. Mm-hmm.
Well, I mean, that's a decent starting point. If you recall last week's call or whoever was on last week's call, we had a situation where I was speaking about oil prices will likely continue to go up, not just because of everything globally, but also because, we use shale and fracking in the US. But now you have a escalating effect to increase oil, and you can already see oil futures are up 2%. 2% may not be much, but because they're choosing to escalate this war, you should see that continue to climb. And there's an inverse relationship, just like I was speaking about last week that the key, in my opinion, the key to what's moving forward is the inverse relationship of interest rates to prices and some commodities to prices. So a good tell for this, how I would figure these kind of things out, if this were to happen on a Sunday for me, excuse me, is excuse me, I already know oil is going to go up, but I could then go right around into another asset class like stocks, and I could bet against the indices. I would buy the volatility index, the VIX, because if oil prices go up, there's an inverse relationship to oil prices and equity prices. So those will go down. As you can see, there's a 200 point drop in the Dow, and there'll be a 200 not 200, but there'll be percentage drops in the NASDAQ and the NYSE also. I get that our focus in these calls are with Forex and currencies, and I will now also explain to you how you take advantage of it from a currency standpoint. So last week, you had a lot of the BRIC nations, as well as Saudi Arabia, dumping US treasuries, likely because their economies are slowing down, like most global economies are slowing down. But here's a key thing. If you have this situation with Israel and Palestine, what you will now also see with the spike in oil prices is you'll probably end up seeing the spike in the dollar also, because you're going to need those dollars to settle up on those oil exports that are going to be happening, as well as you would want some form of flight to safety. I would say, let the week play out, but that's my position. I'm going to be long the dollar. I don't care that the BRIC nations are dumping some of the dollars. The thing is, you have an escalating effect that should trigger, your short-term ability to swing trade and make some money. But again, that's my opinion. Obviously, follow what you're being taught, but I'm more so here to just give you my perspective as to how I look at markets, and I look at the macroeconomic side of things occurring. I don't think that there'll be any sort of peace treaty in the immediate future, and maybe get a few weeks before you get that. So I'm happy to be long dollars at that in this point.
Also, just state how you look at the market though. L is a swing trader, so he's not like, when you're giving this analysis and stuff. Can you tell them how you like he makes what is called thesis.
Yes, correct. So yeah, if I'm doing a thesis, yeah. So if I'm creating a thesis, and this is what I'm using most of this news for, it's not that things have a certain date of expiration. No different than when we were talking last week and someone would say, hey, what do you think oil will get to? I can't say an exact number. I can sort of look at it, extrapolate the percentage I'm looking to make out of oil. I don't care about a number. I care about percentage, because I'm using X multiple of my money, or my, of what I'm investing, or I'm choosing to use a certain amount of my portfolio on currency or commodities. I'm looking to receive a return on it. And then I weigh out how realistic it is to get that return, right? So it's not to say you just hold anything in perpetuity, but it is to say if you have a clear idea of where the market is going, like my thesis on oil, well, this just kind of lit a candle under, well, not a candle, a fire under what I was holding, and I'll probably be able to get out much faster. But a lot of it has to do with just how you divide up your portfolio and you get these things. But nonetheless, the macro of how I was thinking, it's not to say that it worked, it's just to say there was a triggering event that happened. I'm not surprised that it happened, but I want to be prepared for it to happen. There's also now a triggering event in why I'm long the dollar. That one I'm not surprised about, because what have I talked about in a lot of these calls that I've had with you, especially when people speak about recessions? Things are meant to function in an efficient way and not break. Recessions come from unexpected actions happening that cause things to break. So you would have to look at the macro, prepare yourself wherever you think things are going, and then set your position. That is how bigger institutions make large amounts of money. You have to be a little bit early, not terribly early, but a bit early. So those are the things that are majorly going on. Again, focusing back again on treasuries, as I told you, they were very important, and you don't even have to just look at it from a U.S. centric purview. You can also look at it from the BRIC nations and the other nations that are trying to settle oil transactions in their currency or in a BRIC nation's currency. They're having to free up capital by dumping some of their U.S. treasuries, or the other part of this, like I told you last week, they may have to get rid of some of those U.S. treasuries because they may have an inability to settle up on those debts. Not to say immediately, but when they extrapolate in future, hey, if I'm holding how many ever billions of dollars in U.S. treasuries and I have to settle my debts in this new currency, am I able to make good on that for a prolonged amount of time? Because I'm usually are signing to an agreement of how many barrels or how many things you're going to take for a prolonged amount of time. So that's another part of this. I wouldn't say I have too much else to say, but I think that this showed itself, out of happenstance this weekend. But a lot of how you make your big money, or especially how larger institutions make their big money, is positioning themselves for happenstance. So, if you have any questions, please let me know, even from last night. Yeah.
I have a question. So in regards to the Israeli war, so it's using that stage, what effect does it typically have on the dollar itself?
Well, what's going to
touched on it.
happen is that you're going to get more expensive oil, and the majority of transactions that are being settled for oil are still being settled in dollars, regardless of you get all the propaganda of like, well, we're all moving to this, we're all moving to that. It doesn't mean that all of those countries have moved to that yet. There's a lot of them are still settling in dollars. Iran and those areas have a lot of oil reserves that they're going to be sold. Most of those transactions are going to be done in dollars. So really, I think on I would say rolling week basis for the next few weeks, I think you have a stronger dollar, in my opinion. That's my bet. And it's mostly based off of what people have to settle their oil exports or imports, excuse me.
Thanks.
You're welcome. No, I wasn't sharing my screen. I was at a business meeting, so I couldn't share my screen today. But I'm more than happy to come on again, and I can really give you guys the whole bells and whistles of Bloomberg and how I kind of see things.
Come on, y'all had questions last week and we didn't finish y'all's questions. That's why Elle came back on tonight. What are you guys' questions?
I mean, you can ask a different question if you want.
You mentioned Bloomberg last week as far as the different channels that you monitor, if you will, the different things you look at. You said Bloomberg was one of them, right?
Yeah, I have a Bloomberg terminal. Yeah.
Oh gosh, yeah. I understand those are like pretty pricey.
They're pricey. It's like $27,000 a year. They bill it out in quarters, so you're not paying every month. But its main importance, it's just like sometimes when people say, I remember when I first kind of got into the whole, how you have well, I guess we would say Clubhouse, but where social media meets stocks and stuff like that. And most people are I get my news from Yahoo Finance and things like that. I always used to be so puzzled because I used to be well, why wouldn't you invest in a news feed system? Because your advantage, it's not so much to just only say I got to pay a lot of money to get this cutting edge idea. It's who you interact with within the terminal. Let's say you have an idea or a thesis, there's going to be someone there that will help you break down that thesis and create a research report. Or you can simply just buy the research report from other people who are covering those names. Or if you're doing a currency transaction, you want to really know the lay of the land somewhere else, you can call locally in that area to the analysts in that area and get that. I mean, I care about those things a lot because when you do this business enough, you realize that when you can kind of pin down a market or kind of pin down a direction, and you've really gotten your confidence up, you're going to bet big and you're going to win, and it makes it all worth it. You know, it's not this thing. I would say that people kind of look at trading and making money in investments as an absolute, and there is no real absolute win. It's more so that you find the ones that you get paid really well on, and you mitigate the loss on the ones that you get wrong.
I have a question. So since you're long on the dollar, what do you think the expectations are going to be when it comes to gold and like this war and so forth?
Yeah. So the interesting thing is, I don't think you'll see such a tremendous move in gold. It may be there, but I think this is more so taking place with real heavy oil producing countries, a bit different than Ukraine, where you're having commodities, that are meant for food consumption that can generally be traded with gold, closely associated with currency. However, with oil, it's commodities to run economies. And the one drawback of, the oil commodity itself is that if there's economic slowdown, there's less people buying that oil. However, these things move on spot price, and that escalation just makes the price volatile to the upside, making people have to buy. So I personally don't think gold just goes crazy because of this, because I think it's more centered around the export of oil, whereas Ukraine was centered around export of grains and food that are directly correlated with the exchange of money and gold, so to speak, or gold in its relation to currency. My 2 cents.
Okay, so pretty much you were just saying like when it comes to just like the effects, really the dollar, because a lot of people like are paying for oil to be shipped.
Yeah, they
or
have to
exported and
settle.
stuff?
Yes. So like when I say you have to settle your transactions, just no different than like you settle your stock transaction. So they have oil imports or exports that have to be done. They're more than likely going to be settled in dollars. Most of these countries haven't fully moved over to settling in their own currency or taking those loans. I guess with Russia, they've been taking some of those loans in rubles, but mostly all nations are still settling in dollars. Their plan in future is to be settling in the other currencies, and those prices will become more expensive more directly and quickly. Any instability, the person who's selling the oil is going to start moving to the spot price, and he's going to want more for it. And the more is because it's more risky for me to move it. Hence, you probably see in the news, they've got some US battleship moving that way to, pretty much try to keep lines open and things being able to move around, tankers and such.
Okay, thank you. I got it. That was good.
There's another question. Okay.
Hi, Al. I've got a question.
Yeah.
Thanks for coming first. How quickly does news affect the trading, like the charts and so on?
Instantly. So, sometimes people use margin because they're chasing, and I know people are doing this, whether it's in this chat or just in general. someone will use margin to chase like a 3% or a 5% gain because they want to make money. It happens all the time. Well, the same way that person's using margin kind of illogically or chasing is the same way that a person looks at the macro data, sets up a trade, and sets it up with margin on a cheaper basis or a cheaper price. That news immediately affects, and they're able to what is called blow out the position. So let's say you had 1,000 shares or units or whatever. The news comes out, that 2% or that 3%. Remember, you've used your margin, so that 2-3% is far more to you because you're using a lot of money that is not your money, right? So you've increased your return. You get the activity or the swing that you want. You blow out the position. It costs you next to nothing, and that's how more skilled people would do it. So news is super important. This is why it matters so much. Hence why people would not only pay for Bloomberg subscription or some of these other subscriptions just for how fast they get the news, but it is one of the biggest things when it even comes to like when you deal with insider trading. I'm not talking about the news of like, oh, I know what drug comes out next week. No, you can, if the same way you would do it with news coming out like tonight is the same way someone would simply know what the earnings call is like 1 minute or like 30 seconds before they announce it. Use margin, buy the position, it gets announced, they blow it out. Same way. Because your margin, that, like, I'm not saying that's the only way a person uses margin, you can use it different ways, but that's how you could quickly use margin. Take 100 grand, they extend you, let's say $500,000. You have a high buying power, even if it went up 2.5%, you could use that same concept, get the news, blow out the position, you walk away with, easily 50,000 or more. So, and you didn't take much risk. Like, you took the risk in terms of taking the trade, but you didn't actually take the risk in terms of how long you had to toil in the thought process of how it would work. So a person hears about Israel and Palestine right now, or not right now, but like earlier today. Immediately futures trading comes on, they take a position. They're taking that position because they're looking for, 8:30 or 7:30 a.m. New York time for markets to get really active. By the time it's 9:30 to 10, they blow out the position because everyone starts to kind of get into the market by 11:30. The position has pretty much made its money for the day for most people. That's how most people would do it. That's how I would do it. It's a really common way. You could put hundreds of thousands into it, still walk away with the position, even though the news came out like, Sunday night, it would still work.
Yeah, thank you.
No problem. You're welcome.
Yeah, I got a question. I actually just hopped on.
Okay, sure.
Yeah. I know you said you're bullish on the dollar. Long-term wise, like, is that until 2024? What quarter?
Yes, correct. Just going into the first quarter of 2024.
Okay.
I tend to keep my things within quarters, unless it's, like I said, unless it's a thesis that has, like, again, I hate to drum this horse, it's just the best way I can explain it to them. Like a thing like my thesis on crypto is not a quarterly basis. It's based more off of like what regulation is and what those things are. So it's a bit different. But things that are very macro moving and have these other inverse points to them, I base those off of quarters.
Gotcha. And I'm still trying to like learn fundamentals when it comes to, the dollar versus like the indices, like the SPY and NAS and everything. I know they kind of move inverse of each other.
Mm-hmm.
So with the dollar bullishness, like, how do you see the markets getting affected? Seeing that we are coming to like Q4 where, the retail market is supposed to like increase spending because of Black Friday and Christmas and all of that. So wouldn't that kind of make the markets a little bit more bullish? Or
Well,
the dollar strength? Are you
it
seeing
depends. Well, no, I was going to say it depends if you think that it could be more bullish. The first question you should ask yourself when you say, all right, we have holiday season coming up, is how much how much credit card debt do Americans have, and is it growing? And the next question you would ask yourself is, how many people are late on car payments, so on and so forth. Things that people have to pay, if the debts are increasing and they're becoming harder, you shouldn't, in my opinion, I would not bet on a strong Black Friday. But the next portion I would look at is, how are buy now, pay later loans? Are those companies reporting more defaults? Are those companies reporting slowdowns or layoffs? If they are, then you can see people are spending less. This is how I would extrapolate going into Black Friday. These are part of the things that I use to come up with that dollar thesis. I do not think that it will be strong in the holiday season, because American consumer debts are at their highest, with car payments at their highest that they've ever been, with many 90-day lates and repossessions. Yes, people are still buying and they still have credit to buy homes and things of that nature, but the prices of those homes are, I wouldn't say falling drastically, but they're definitely falling 50,000, 75,000. You can see these things when you go to treasury.gov. The prices of those homes are falling for what people are asking, and less homes are selling. That's how I would analyze it.
Gotcha. And with the job numbers that just came out, way higher than expected, like, how are you seeing that affecting things in the long term?
So job numbers being higher than expected, I think those things have been teetering back and forth. So I'm not really surprised by it. It doesn't make me say Americans feel more comfortable in their position, because a person could be getting more jobs and more people employed, but that doesn't mean they're employed enough to pay their bills. A lot of people would complain that they're still living check to check and they're not making enough. And the way you can easily tell if it's true is going back to consumer debts. Are they being paid down? Instead, they're not. They're consistently increasing. If they consistently keep increasing, I mean, obviously the rudimentary thing is to just say, well, either they keep paying or people will default. You will probably take some time before you see defaults, and there's a reason. They just started student loan payments again. So that extra money that people might have had to do X, Y, and Z, or shop during the holidays, or even with the fact that there's more employment, if the employment is not paying them more or being able to, like they're not underemployed in terms of pay, the extra money is going to student loans. So they're still going to have a problem. Excess money that people had, the restart of student loans is going to be a big deal for that excess money. I remember a lot of people's payments are, I remember even when I was in college, I don't have loans anymore, but they were still about $300, $400 a month. And some people have multiple loans. So it's not like, like one of the loans is like $300, $400, but then they'll have like 3 or 4 of them. Very common to have. I saw someone, as I was looking at someone's credit the other day, and they definitely had like 6 loans. Ooh. They were all like different amounts of money, but still it's like 6. There's still 6 payments,
Gotcha. And like my final question, like with Fed not really raising rates, are you seeing an increase coming soon, even though we're kind of heading into like an election year next year?
Oh yeah, you're still going to get an increase. They're just trying to play it safe, in my opinion, as to not wanting to increase too quickly. And just it goes back to what the Fed's job is. The Fed's job is to manipulate to an extent and to try to make things land softly, as everyone always says. But as I've said a few times here, and I'll continue to say, it's unforeseen circumstances that generally cause the issue. And that's why I keep harping, especially if you didn't listen to me last week, Off balance sheet debt is really where your issues are. If you want just for educational reasons, just pay attention to not the part of the FTX case in terms of its fraud, but the fact of how much that exchange closing shook that market, and just move that over into the general broad market. And the general broad market is global, and there's off balance sheet debt there. That the FTX situation, even though people will say, oh, it's fraud and this, yes, it is, but it's off balance sheet debt, 8 billion in, funds that don't match, and it's off balance sheet. So it can be a company that isn't public, it could be a private company, but just a very sizable one. And there's a bunch of public companies, as you could see in FTX, that deal with private companies, and they get hit with these things. So you're trying to get a soft landing. There's always usually unforeseen things while you're trying to do it. And I think that raising rates is what they would like to continue to do in this very environment right now. But they need to play it cautiously, because if you raise them too much, you will have a situation where somebody out there cannot make payments.
L,
Yes.
there are a few people on YouTube that have questions.
Oh, yeah, sure.
So Dream to have says, how long do you see the other countries moving away from the US dollars completely?
Oh, that would probably take several years. I couldn't say like in a certain amount of years, but you want to know how you could kind of gauge it? So globally, there's probably like over, actually, I just looked at it. So give me 2 seconds. I'm going to tell you. This is just the BRIC nations and Saudi Arabia. They have 835 billion. Sorry, no, that's China. China by itself. This is not even the BRIC nations. Just China is $835 billion in US treasuries. The BRIC nations have, that's Brazil has 227 billion. BRIC nations have 235 billion. Easily over, it'll take like 10 years plus. And the reason why is because you can't simply just dump this stuff. And the reason you can't dump it is because someone else is monitoring it, like people like you. But, people who write about investments and write about what's going on in economies. So even if you may not be, sophisticated enough at this point and you're still growing, there are journalists and people who monitor that exact kind of thing. So to splash the pot and just say, you know what, we're getting out of all of this and we're just going to dump it, like, a person would think, it wouldn't happen. It would cause a lot of instability, and it would cause a lot of certain type of calls to go out. Like, not to draw out this answer, but I always like to let people be able to visualize these things. Like in 2021, when you get Janet Yellen in there in the Fed, and it is other nations saying we want to dump our short-term treasuries. We're not receiving any yield on them because, US interest rates are so low. So people are on the horn. They're making these negotiations. They're making certain things to get other things, trade in essence. So they keep that currency. So I think sometimes critics, I don't want to say we, but critics think it's so cut and dry, but the whole point of your government is to massage these kind of situations to make them work the right way. And no one just dumps all of their treasuries unless you reach a point of default. This is why it's such a big issue when they don't have budgets or hitting debt ceilings and these kind of things, because, even though we talk about it, like, oh, we could hit a default or the US can't pay its bills. That's a big problem when you're dealing with global treasuries and all of those things. So generally, That's why people will bet like, oh, they're going to figure that out because there's bigger implications to not figuring it out. So I would say it's over 10 years in order for something like that to happen. There's too many treasuries out there and it takes too long to unwind them. And then, people fighting to make you keep them because that happened too. I don't necessarily want to have to explain it again. I don't mind explaining it again if you want me to, but there was a method used to force foreign nations, sovereign nations to keep them. And it triggered the issue that happened with bank failures in this country by having to be forced to keep treasuries.
Okay. Natava said, how is the oil prices related? How are the oil prices related to currency?
Well, they're going to work. They're tied to each other because you settle payments of oil price of oil delivery in currency. But
Yeah.
most oil is settled in dollars. And there's still going to be a demand for that currency. But this time the demand is, even if the demand is less, the price is more. So you need more dollars to buy the same thing that you were buying a week ago now. And if
Okay.
war,
Art R says, what would be a reasonable amount of time for the volatility index and the stock indices to be impacted by the rise in the dollar index? Is it 1 or 2 quarters?
I would say 2 quarters. I don't think it's just going to, smack down like that unless, again, there needs to be a escalating event. And I couldn't tell you which one it is. The key to this whole thing is if you could figure out what those escalating events are, that's your $1 billion.
Okay. And then, sorry, I answered some of these for them.
Okay.
Hold on. It was another one that I needed to ask you. Just find a minute. Blah, blah, blah. Clinton said, during times of war, is it best to trade commodities for more profits?
During times of war, yes. But you have the way you would know what commodities, you can't just pick them. You have to know what commodities being exported out of those countries. Ukraine is an example. Very quick to know what to do there because most grain comes from there. Actually, the majority of grain in this world comes from the Ukraine. That's where you made your money if you were trading commodities and wheat. But in this area of what's going on right now, the commodities oil.
Bluefinger.
Go ahead. I'm sorry.
Sorry, no, you go ahead.
No, I was just going to say, and the other part about this is like, I ran in some of these places are landlocked places. So you get a spike in oil, they pay more to export. So all of those things affect. Hence why you have a battleship in those areas because they're trying to say, all right, we still have oil to export. This needs safe passage.
Hold on, I'm sorry, I lost my question. Bluefinger said, I've heard you say we need rate hikes until we hit 8%. Do you think the US has the stomach for that?
They don't have the stomach for it, but they need it. And the unfortunate part is without getting it, you never get housing prices to be normal and make sense. Even when people are feeling like, well, you could still buy, you can do this. You best believe you're going to be $100,000 or $200,000 over the price. You'll start another cycle. You'll be stuck in that house for about 7 to 10 years without it making any money because it will lose its value. And your ability to refinance will not be there because it has lost its value. The sooner you could get it to an 8, the better, because you could, it's kind of like with Volcker, you have to just grit your teeth and bear it. But again, it's that whole breaking the system. Take your time, because I know it's not currency, but take your time to read about off-balance sheet debt. It's dangerous because if companies issue debts or bonds at certain prices, 8% and I can't finance or I can't borrow money to pay my employees because credit revolvers are also used to pay employees, I may not be able to stay in business and make good on a substantial amount of debt, and it could cascade. However, a lot of this is meant to shake people out, and bankruptcies do have to happen, and it's not enjoyable, and you don't want unemployment all of a sudden to just spike. That it has to happen. We can try to, set it down gently. Something's going to break. Hopefully it's not something big, but it will. And what breaks could be a lie, it could be the truth, it could be fraud, it could be whatever.
Bluefinger also said, so is stagflation the next thing to happen to the economy?
Yeah, if they're indecisive on these rates, I think you get more stagflation, which will force them, in my opinion, to have to raise rates. Your stagflation is going to get rate increases before you get rate cuts, in my opinion. The rate cuts are just for people trying to save their ass because they're positioned wrong. I know that sounds very self-serving, but it is the truth. Like, you see what rents cost. like they're crazy. The only thing that is coming down in price is probably commercial rents because, those are other mitigating factors, but predominantly work from home. But you see that like rental rents are still high, still increasing. Just some real estate is coming down. So stagflation isn't going to, in my opinion, it's not going to make, them cut rates. It's going to force them to have to increase them.
All right. Then Art says, do you see 10-year treasuries yielding 18 to 20% in the near future?
No, that's high. That would, like, 10 years. So this is just in case Art is not aware of the 10-year treasury. Again, I'm not saying you don't know or you do know. If 10-year treasuries were to yield that much, name any junk company or like junk rated, like C rated company. Again, this doesn't tie into currency, but it does tie into your markets. It still ties into currency. It's just a deeper dive. They would be borrowing at these high rates and they would not be able to make good. Hell, some of them right now finance in the 5-year window, 5 to 7 year window. That's where most corporate debts mature. They finance that at anywhere from 11 to 15%. And it's hell for them to make payments. They're constantly jockeying and moving things around. So if the broad market was there, it would be disaster, but if you get rates at an 8, you better believe people in that 5 to 7 year window will be paying out yields somewhere in the neighborhood of 18 to 20%. It would be there. It's not like it hasn't happened before. It's just going to be difficult. Happened in the 80s for those who might be interested in knowing when it happened. It would have been the mid 80s, right after savings and loans.
Okay. Last question. All right. So will tech stocks and growth be in a trading range or decline as an invested? Sorry, this isn't proper English. As an invested, or I hear some of the greats say they're setting capital aside until 2026.
There's a lot of capital set to the side. You want to know how you can see it. The way you can see when capital is being set to the side is to how many people are taking out loans but not deploying the capital that they're taking out. And that is happening right now. Hence why you see there's still lending going on. Of course, there is definitely still lending going on if you have good credit rating. Whether you be an individual or a company, but especially for companies, you're going to get access to credit. If you're an institution, you'll get access to credit and you can deploy that capital at a different time. Or you can choose to collateralize things that you have. I would say that tech is probably range bound for the near future. I know I had a wrong assumption thinking that when there were a lot of layoffs that you would see a lot of tech really tank, but I just think at this point it's pretty much just range bound. They're still going to have layoffs going forward. I like having a good war chest going into the next election, this upcoming election, excuse me. So I see why people are holding on to their coins. That's what I would do. I traded way less this year than I did in the previous year, but I know why also, because things were more range bound, more flat. You're looking for, more activity to happen. It's like I feel it's like a war of attrition with this past year, and had some highlights, but mostly nothing to write home about for the most part.
Okay. All right, you guys. Say thank you to Elle.
Thank you, guys. It's great speaking to all of you. I will
Thank you, Elle.
figure out how to. Oh, no problem. I will figure out how to share my screen so I can show you guys like Bloomberg, and you could pretty much ask me whatever, and I'll show you like some research on it, and pair it, and you could maybe get some thesis that you have questions on, or something of that nature.
Appreciate it, Al.
Thanks, Elle.
You're welcome.
Thank you so much.
Thank you, Al.
All
Very
right, you guys,
informative.
I will make sure I put Monday's call and you guys chat. Make sure you guys follow Elle's podcast, Trade Talk.
Oh,
from
I have a
Hedge Fund
question.
Insider. Yeah.
I have a question.
Yeah.
Did any of you listen to the episode that spoke about the global reserve currency shell game? If you did get a chance to listen to it, even if you didn't, you should listen to it. If you really want to understand what's being played, listen to like what's happening, listen to that. If you do and you have questions, let me know. But if you didn't, it's all good. I don't have an issue either way. I'm just trying to tell you that it's a really good breakdown of what you're actually seeing and what they're doing, because what they're doing matters a lot. To currency trading, it matters a lot. People are jockeying for position. Yeah.
All right, you guys. So make sure you guys go watch that episode. Again, it's Trade Talk from a Hedge Fund Insider. So make sure you guys go subscribe to the podcast. Show our friend Elle some love as he graciously shows you guys some love. And I bid you guys a good night. Again, I will make sure I post you guys Monday call in your Facebook group. All right. And I will see y'all next week.